Today, President Donald Trump told Walmart to, quote, eat the cost of rising tariffs.
The retail giant says it's having to offset the impact of President Trump's tariffs.
Walmart now saying it must raise prices to deal with the cost of tariffs.
Imagine walking into your local Walmart and seeing your usual $9 tray of beef jump to $14 overnight. A head of lettuce costs 30% more. Your morning cereal is up by $2. Walmart's famous low-price banners? Gone, shelved to stem a projected $25 billion net loss for Q2 2025. And higher grocery bills are just the start. Walmart just announced it will shut 10 major distribution centers by the end of June and lay off over 50,000 workers. A blow that could break the just-in-time supply chain keeping American retail afloat. The trigger? President Trump's new tariffs. On April 2nd, 2025, Trump signed Executive Order 14,257, dubbed the Liberation Day Tariffs. By April 5th, every shipment entering the U.S. faced a 10% tariff, sparing only Canada and Mexico. Days later, retaliatory tariffs hit 60 trading partners. China took the biggest hit, a crushing 145% on most goods, forcing suppliers like Huner Toy Factory, a key Walmart partner, to slash production by 70% in April alone. In just weeks, nearly half of U.S. toy makers risk collapse. Container shipping costs from Asia to the U.S. jumped from $3,500 to $6,500 per 40-foot box in 3 weeks, and could soon hit $8,500. Blank sailings, stranded containers, and port delays have left Walmart shelves bare and trucks idling. The chaos spread worldwide. Europe reeled when Trump threatened a 50% tariff on all EU goods, wiping out $180 billion in market value and freezing German auto exports. South Korea scrambled as a new 25% duty threatened nearly half of Hyundai and Kia's U.S. shipments. A brief court injunction has blocked parts of the tariffs, but the legal limbo only deepens uncertainty. Meanwhile, storage costs are exploding. Bonded warehouse rents have quadrupled, regular storage is up 60% in 1 quarter, and Flex, the Airbnb of warehousing, now has a wait list. With empty aisles and millions lost daily on idle containers, Walmart's CFO warns prices will keep climbing. Beef that used to cost $12 a pound now hits $14. A patio set costs $60 more. A child's car seat carries a $100 tariff. For the average American family, the new trade war could drain an extra $1,000 a year, just as thousands of warehouse workers are forced out. A leaked memo, Project Triumph, confirms Walmart will mothball 10 distribution hubs coast to coast in the next 6 weeks. The just-in-time model that powered U.S. retail for decades is cracking, and the price lands squarely in the American shopper's cart. The list includes Riverside, California, Fontana, California, Brooksville, Florida, Winter Haven, Florida, Pageland, South Carolina, Sanger, Texas, Elwood, Illinois, Groveport, Ohio, Plainfield, Indiana, and Menominee, Wisconsin. Each is a confirmed Walmart distribution or fulfillment center over 800,000 square feet, operating 24/7 as part of Walmart's 151 million square foot logistics network. Supply chain firm MWPVL says a typical Walmart GMDC employs over 1,000 full-time workers and up to 1,500 seasonal staff. The People's Union USA estimates that across these 10 sites, about 50,000 jobs, 70% of them temporary, will be suspended without pay starting June 30th. The announcement sparked a 72-hour nationwide boycott set for Monday. It's not just unions protesting. Local governments are alarmed too. In DeKalb County, Georgia, where 2 superstores shut earlier this year, Mayor Lynn Deutsch warned of another blow to paychecks as Groveport prepares to close. Brooksville, Florida City Council called an emergency meeting, fearing a ripple effect among 200 trucking companies clustered near D.C. number 630, which provides 9% of local tax revenue. Nationally, the job losses fuel outrage just a week after Walmart said it would cut 1,500 corporate roles for streamlining. Lawmakers from both parties want a House Commerce hearing to ask why Walmart is cutting its distribution backbone, just as the White House insists President Trump's new tariffs aren't hurting Main Street. With half its bulk storage capacity offline, Walmart must stretch its restocking cycle from 48 hours to up to a week. Stores in the Southeast have been told to fill every freezer as fresh deliveries risk delays. Some analysts warn Walmart's just-in-time model could collapse. On TikTok, the hashtag empty aisles hit 12 million views in a day as shoppers posted bare shelves, tagging Trump. Can you stop this tariff war before bread and milk become luxuries? The fallout is massive. 50,000 families face unpaid leave, supply lines crack, and online outrage grows. Many wonder if tariffs are really bringing jobs home or just pushing warehouse workers to the edge. In Brooksville, Everbright Sewing, which made 20,000 Walmart uniforms a month, shut its doors after a single canceled order. The owner said one call from Walmart's procurement team meant instant bankruptcy. Reuters reports Walmart has demanded Chinese suppliers cut prices by 10% per tariff round, pushing thin-margin factories into survival mode. The Huner Toy Factory in Guangdong, a 40-year Walmart partner, slashed production 70% and laid off 130 of 400 workers after orders vanished under the 145% tariff. Domestically, the U.S. Small Business Association's confidence index fell to its lowest in decades, showing deep uncertainty as tariffs shift overnight. Shipping costs have doubled. West Coast container rates jumped from $3,500 to $6,500 per FEU and could hit $8,500 by mid-June. Trucking saw a brief spike as companies rushed in shipments ahead of tariffs, but volumes are now flat. With distribution centers closed, local carriers lose steady routes, forcing drivers into unpaid furloughs. Small suppliers are cutting insurance, delaying payroll, and asking for loan extensions. The NFIB warns small business defaults could hit their highest level since 2008. The fallout is spreading fast. Logistics firms, warehouses, even corner delis near distribution hubs are losing revenue. As one Wall Street analyst put it, when a warehouse locks its doors, every truck outside turns to rust. The bigger threat isn't just higher grocery bills. It's a supply chain breakdown that could wipe out entire industrial parks once reliant on Walmart. So far, tariffs have cost Walmart $25 billion. Its response, Project Reset, aims to overhaul its supply chain in 2 years, starting with an exit from China. Before Trump's 145% tariffs, about 60% of Walmart's non-essentials came from China. By early 2025, that dropped to 48% as Walmart scrambled for deals in Vietnam, India, and Cambodia. In Vietnam alone, it plans to invest $1.2 billion in textiles and home goods in exchange for a lower U.S. tariff. But the White House's threat of a 46% anti-dumping duty on Vietnam, later delayed by 90 days, forced Walmart to redo contracts overnight. Walmart isn't betting only on Asia. It's spending $5 billion to build plants in Arkansas, Ohio, and South Carolina, funded by bonds issued when rates were still low. But that's just the start. Walmart has pledged $350 billion over 10 years to boost U.S. production and cut shipping times from 28 days to under a week. Its next bet is high-tech, a $520 million deal with Symbotic to roll out AI robotics in 400 fulfillment centers. The system, Link 16, scans freight rates, weather, and tariffs to reroute containers before penalty fees hit. Walmart says this could save $600 million a year and might even be licensed to smaller retailers. But it all hinges on tariff stability. Every time the White House signals a change, Walmart must react within 72 hours, an impossible feat for a $680 billion giant. One tweet could spike costs and drag Walmart deeper into the trade fight. Since Liberation Day, Walmart stock has dropped 11% since April 2nd, wiping out $37 billion in 30 days. Index funds rebalanced, adding to the sell-off. Panic hit logistics too. FedEx cut its outlook and plunged 11% in a day, its worst drop since the pandemic. The Dow Jones Transportation Index is down over 17% since November. UPS fell 8% after announcing 20,000 layoffs and 73 site closures. Markets are warning, if tariffs stay high, this could just be the beginning. EU leaders have threatened 95 billion euros in retaliatory tariffs if Washington doesn't back down by July 9th. Brussels says tariffs alone won't fix the EU trade gap. Canada called the policy a political debt that must be repaid. And Mexico warned new levies could cost 400,000 U.S. jobs. The fallout is global. EU business confidence sank to a 3-year low. Canadian bond yields climbed. Gold and the Swiss franc jumped as investors fled to safety. Allies see trust eroding while U.S. exporters risk losing ground. Rumors of Walmart's $25 billion hit and shutdowns aren't just Walmart's problem. Tariffs can break supply chains. Americans are already paying 2 to 3% more at checkout each month. If tariffs hit 145%, the damage could spread far beyond retail. Factories could close. Jobs could vanish. And the global trade system could buckle. So the question now, will Trump back off to protect the economy or push the trade war even deeper? This was just the beginning. Hit that subscribe button and buckle up. Digital Garage has so much more in store.